All right. Today is Monday, October 25th. This is a recap for the stock market activities today. And folks, I got a good one for you tonight because this will be one of those shows accompanied with a bloodbath and people pressing the dislike button like crazy. So buckle up your seatbelts, hold on to your diapers, and
Let's get it on!
in focus tonight, we're going to talk about the fake news from Hertz that sent Tesla shares soaring and Elon Musk becoming the richest man in the world by far. And then we're going to talk about a segment we call Senile Leadership. And lastly, we're going to talk about earnings, specifically from Facebook, and the commentary, the explosive commentary from Mark Zuckerberg. We start with the story that sent Tesla shares soaring beyond $1,000 a share to surpass the valuation of $1 trillion. And perhaps the rise in Tesla today single-handedly kept the market trading in the green. Heading into the day, we did not have any good news coming from Tesla. We actually had bad news after bad news after bad news. And we start with this. Tesla keeps ignoring the government's requests to fix the autopilot system. And of course, over the weekend, we heard a lot of complaints from Tesla customers that the new autopilot system is malfunctioning.
So, autopilot is not engaged. I can't engage it anymore. So, I'll show you what it's doing with cars. So, far away, right? Not coming in super fast, and it's freaking out about this car in front of me. Again, not coming in super fast, still just freaking out about this car. Oh, there it goes again. See, this is what it's doing. It's like malfunctioning now. And earlier on the highway, it slammed on the brakes because of this happening over and over again. I had to get off the highway. It wasn't safe. Honestly, a little scared to get home right now, too.
Of course, Tesla and Reverend Elon Musk, they like to use their customers as lab rats, putting not just them, but all of us in danger by beta testing the autopilot feature on American roads. No regard whatsoever for any malfunctions or any accidents, not just for Tesla drivers, but for other drivers. And of course, the bad news continued to mount overnight for Tesla because they had to pull back the feature due to all of these bugs and malfunctions. The company has come under criticism from regulators for practices related to its full self-driving beta. And it doesn't stop here, of course. Tesla cited unspecific issues for pulling back the FSD beta software. And of course, today the NTSB issued a letter to Reverend Elon Musk asking him to limit where the autopilot system can be used because it is becoming a major public safety issue. The NTSB chair expressed concern over Tesla's inaction on safety recommendations in a letter to Elon Musk. Safety recommendations made 4 years ago remains unimplemented, she says. And of course, the chair of the NTSB will be interviewed live on air tomorrow in the morning by CNBC. And the bad news continued to mount on for Tesla. Here's another headline indicating that Tesla is quietly raising prices, and matter of fact, the news was confirmed right away. We now know that Tesla is hiking prices up again by $5,000 for all models. Now, this is good news for the company. Why? Because it has the pricing power. We are in a massive inflationary environment right now, and Tesla has the pricing power. Why are they not flexing their power? And finally, now the company is flexing their pricing power and jacking prices higher. And we know that the culties, Tesla culties, will pay anything. Prices higher by $5,000, $10,000, it doesn't matter. They will pay, and therefore Tesla has the pricing power. If Tesla shares went higher based on this news, I would have said, you know what, it is understandable because jacking prices higher will improve the margins, and Tesla customers will not mind paying more. Reverend Elon Musk could take a dump right now. He will package it right away, and some Tesla culty will pay $30,000 to buy the dump of Reverend Elon Musk. Preferably as an NFT, of course. On the other hand, jacking up Tesla prices higher will cost the company market share. specifically when the competition is ramping up from Ford, GM, Audi, Mercedes, Hyundai, Chinese brands. Everybody's competing with Tesla now in the EV market. We also had bad news overnight regarding Reverend Elon and the pump and dump schemes that he leads. One of them is Shiba Inu, or Uno, whatever it is, doesn't matter to me. I know you guys are trading it, but who cares? Anyhow, the shares of Shiba coin fell down 20% overnight after one word tweet from Tesla CEO. Now, luckily, of course, the shares rebounded higher. This is the power and the dependency on one man's tweet. Somebody, of course, asked Reverend Elon, "How much Shiba are you holding?" And Reverend Elon says, "None. I'm just pumping here, folks." And of course, the shares went down big before recovering higher again. And Reverend Elon says, out of curiosity, "I acquired some acai hash strings called Bitcoin, Ethereum, and Doge. That's it. As I've said before, don't bet the farm on crypto." Are you people even listening? Your cult leader is saying, don't bet the farm on crypto. True value is building products and providing services to your fellow human beings, not money in any form. And of course, Reverend Elon is making a lot of sense here. But of course, don't bet on Reverend Elon to make sense for too long, because the next tweet is this one. Elon Musk says, "What if you're with a UR, your name is Johnson, and you just happen to work at Johnson & Johnson?" I guess the answer is Mr. Johnson at Johnson & Johnson. Ha ha ha. Very funny, right? But anyhow, we have more bad news for Tesla. All of this, by the way, was happening overnight and during the weekend. And this time it comes from Lucid Motors. Lucid Motors Air EV finally hits the roads with a range that blows Tesla away. Lucid's Dream Edition luxury sedan can travel up to 520 miles on a single charge, but it will cost you. The cars carry a $169,000 price tag. Now, this is not an immediate threat to Tesla because it competes with the Model S, which is, by the way, going to go extinct pretty soon. Of course, the problem, what if Lucid starts to scale down to mid and lower tiers and they start competing with Tesla? The CEO, of course, is a former Tesla employee. He knows all the secrets, and he's eyeing destroying Tesla and Elon Musk and becoming their biggest competitor. So we have bad news from the autopilot system, from the regulatory side, and from the competition. How do you distract from all of this? Here it is. Tesla hits market value of $1 trillion for the first time after a deal to supply Hertz. Yep, the bankrupt company Hertz, with 100,000 vehicles, sent its shares soaring. And the news here is we have a company, a rental car company, Hertz, emerging from bankruptcy. And of course, soon enough, they will be IPO'd in the NASDAQ. Pay attention here. And therefore, mysteriously, of course, coincidentally, we're getting this news that Hertz ordered 100,000 Teslas in a deal reportedly worth $4.2 billion. It is the single largest order of electric vehicles. Now, why didn't Hertz go with 1 million vehicles? Because you're just ordering, right? How about we call Tesla and say, you know what? I want to order 1 million souffles. How soon can I get them? And the answer is maybe 2022, 2023, 2024, 2025. Or never. But it doesn't matter, because we're just pumping and dumping, right? The deal is reportedly $4 billion, but the share gains in market cap for Tesla exceeded $50 billion. And of course, Tesla, the souffle, reached a major milestone. Here it is. If you are wondering which junk-rated company would be the first to reach $1 trillion market value, your wait is over. It is Tesla. Do me a favor, bookmark this headline right there, because when this charade, when this show is over, when the bubble goes down, everything crashes, you would look at this headline and you'll know right away what went wrong. But before I get too bearish here, remember this. Netflix used to be a junk-rated company. Not anymore. Netflix loses its junk rating and gets upgraded to investment grade by the S&P. While this does not come as a surprise, it is a great example of a company that relied heavily on borrowers' goodwill for years to make a bet that really paid off. And why did it pay off, by the way? I'll tell you why. Because we have a coked up economy and a coked up market. We have a market that doesn't care about the fundamentals at all. It hasn't been caring about the fundamentals and the actual economy for years. And the reason is the cocaine. You see, back in 2008, the economy died and the market died. Rest in peace. It's over. The Great Depression on steroids. However, here comes the Fed with the rescue, the QE, and the beginning of the cocaine era, where the Fed pumps money out of thin air, printed out of thin air, into the market, being the traffic cop, directing every penny from pension funds and retirement funds away from bonds and any form of investment all the way to the riskiest forms of investment in the equities market, buying growth and momentum. Because when interest rates are projected to go down due to the Fed's manipulation of the market, you have to buy growth and momentum. You have to buy companies with future earnings. And in this case, in this easy money policy where coke is abundant, you have a company like Netflix, for example, a startup since the 1990s, unprofitable, a business that is going nowhere at all. But thanks to the Fed's manipulation, the equity value of Netflix continues to rise higher and higher and higher and higher, even though the company was never profitable. But the rise in equity value enables the company to take loans and issue junk bonds to use that money to expand and kill the competition. And the rise of Netflix, of course, came at the expense of Hollywood studios, smaller studios that have to produce earnings. If you are a Hollywood studio, you raise money and your bet is after the movie is released, you have to produce profits. And if you don't produce profits, the entire business goes down. Not in the cocaine era for public companies. Netflix can continue to lose money year after year after year after year, but their equity value continues to go higher and higher and higher and higher, enabling them to borrow more money, and at some point, the company destroys all the competition and it becomes profitable. Thank you to the cocaine from the Fed. And this is exactly what happened with Amazon, by the way. Amazon hasn't been profitable for years. They continue to lose money year after year after year after year. But thank you to the equity value surging higher every day, they can borrow more money and they can expand, hiring more people, buying more warehouses, and underpricing mom and pop shops. And what do you know, after years of this practice, mom and pop shops went underwater because they have to produce profits every single year, otherwise they're out of business. On the other hand, Amazon can underprice mom and pops, destroying their businesses, not producing any profit, yet the equity price continues to rise higher and higher and higher. After years of this practice, of course, mom and pop shops are gone now. Amazon is a monopoly, and here it is, it becomes profitable after years of this practice. Once again, thank you to the cocaine policy from the Fed. We have the same story with Tesla, by the way. Tesla hasn't been profitable for years until recently. Any traditional automaker has to produce profits, otherwise the company goes bust. Not Tesla though. Why? Because the shares continue to rise higher and higher and higher. Thank you to the flow of funds to the equities market, even though the company has been losing money year after year after year. Of course, the initial shorts who shorted Tesla a few years ago because quote-unquote they're running out of cash. You don't short a company because they don't have cash in the cocaine era. We have a lot of yayo floating all over the place. You're not going to short a company due to a lack of yayo in the era of cocaine. And of course, the shorts got caught with their pants down and they had to cover, and that pushed the shares higher and higher and higher. And people continue to pile in Tesla and the shares go higher and higher and higher. After years of this practice, the company becomes profitable at some point. Thank you to the Federal Reserve. Thank you to the reckless monetary policy from the Fed. And here's my take, by the way, about this whole Hertz Tesla thing. I said look at Hertz financials to realize that there is no way they'll be able to afford buying 100,000 Teslas. Look at Tesla's delivery numbers to realize that there is no way to accommodate 100,000 order for one customer. This is a pump and dump scheme by Hertz sharks prior to the NASDAQ IPO. What am I talking about? Here it is. Hertz files for a new IPO. This was on Saturday. How do you pump the price higher and create all the excitement ahead of the IPO? This is exactly how. Fake news doesn't matter. Nobody's going to fact check it at all. Matter of fact, the media is running with it, and we know that the media is not reliable, specifically Bloomberg. I'm not taking a shot at Bloomberg here because I like Bloomberg, but they run with anything. I can grab the phone right now, give them some fake news to pump a stock that I own, and they're going to run with it. No fact-checking whatsoever because we have reporters at Bloomberg who want to be the one who, quote-unquote, broke the story. I mean, I'm old enough to remember the news from Bloomberg just a few days ago when they said that PayPal is acquiring Pinterest. What do you know? A few days later, this is what happened. PayPal says it is not buying Pinterest. Fake news. PayPal said in an update on its website that it is not pursuing an acquisition of Pinterest at this time. Shares of Pinterest soared last week after Bloomberg first reported that PayPal may acquire the social media company. PayPal's share went up more than 3% in the morning, trading Monday on the Nasdaq Stock Exchange, while shares of Pinterest were down over 12%. Somebody wanted to pump Pinterest last week. They did the job. Bloomberg, of course, ran with it. No fact-checking whatsoever. Now they're done with the pump. Here comes the dump. In, out, hello, goodbye. Thank you, Bloomberg. I'm also old enough to remember the false news from Bloomberg when they told us that Walmart is buying some crypto. Litecoin. Remember that one? I'm also old enough to remember that Bloomberg got fined over 5 million euros over a fake news story that they did over the stock market in France. But it doesn't matter. It was a gift for Reverend Elon. Reverend Elon made about $29 billion today alone. So if you thought you had a good day, think about Reverend Elon, because your good day doesn't compare at all with the good day that Reverend Elon had. And the problem here, folks, they think that we are a bunch of village idiots in the 1950s. You can run false news stories, and we're just going to believe them. And they do this with regular news, with medical news, with economic news, and now with market news. I mean, remember this. Hertz, just a few weeks ago, was a bankrupt company that had to be rescued, and it was rescued by the sharks, the venture capitalists. Knighthead and Certarus won a plan that values Hertz, including debt, at around $7.4 billion. Bloomberg said the proposal is set to fully repay debt holders. It will also hand institutional and accredited stock investors around $240 million in cash and the chance to participate in either a $1.6 billion right offering or warrants for about 20% of the recognized company. The proposal will need to be approved by the U.S. bankruptcy court. So here we have a bankrupt company that got bailed out by a little over $7 billion, and they're going to spend about $4 billion right away to buy souffles. Are we children? Are we a bunch of dummies to believe this garbage? This fake news? Of course not. So don't be surprised in the next few days to hear a retraction for this story. Oh, actually, Hertz meant to buy 10,000 Teslas, not 100,000. We missed it by a zero. Our bad. Sorry. Meanwhile, we have somebody who scored big from buying Tesla and Hertz calls last week. Moving on to a segment we call Senile Leadership. We start with President Joe Biden. It doesn't appear that President Joe Biden is about to get a good deal at all. Democrats are trimming Biden's social safety net plan as they rush to strike a deal this week. You know, everything is going higher and higher and higher. Prices are going higher and higher and higher. Inflation is going higher and higher and higher. The stock market is going higher and higher and higher. But you know what's not going higher and higher and higher? It's this budget deal. It continues to go lower and lower and lower. And by the end of the deal, they're going to announce we have a $1 trillion deal. $999 billion will go to our donors, and about $1 billion will go to infrastructure spending. But President Biden was doing a town hall on Friday, and I'm not sure if you guys caught this moment because it went viral. I could not believe that this happened live on air. Take a look.
About that, with just in terms of inflation, because you had told us at a town hall, I think it was in July, that this was just near-term inflation. The Wall Street Journal recently talks to like 67 financial experts who said that they saw high inflation going all the way or deep into 2022.
And then we have another senile leader in Jerome Powell, the head of the Federal Reserve, who continues to say that inflation is transitory. And oh, by the way, the goal of a healthy labor market could be met next year. This is the same guy who continued to say, oh, it's going to be transitory. And now we know it's not transitory. Now he says our substantial further progress, oh, we're going to reach that one maybe next year. Mr. Powell, it's time to resign. In shame, because your so-called maximum employment is not working at all. Here's the headline that we got today. Denver's airport held a job fair to plug its huge labor shortage. An executive said he'd hoped 5,000 people would come, but only 100 showed up. There you go, Mr. Powell. This is your maximum employment. We reached maximum employment because we're sitting at home doing nothing. And this is what happens in this yayo economy. When you print yayo out of thin air all over the place, and everybody's rich, on paper, of course. We don't talk about the 40% of black businesses, small businesses that got wiped out. We don't talk about other small businesses that completely disappeared, and they continue to struggle day after day with higher taxes, more regulations, and a labor shortage. We don't talk about the Americans who lost their savings and livelihood in this pandemic. But on paper, when we have all of this yayo floating around, nobody wants to work anymore. Look at my crypto gains, bro. Mr. Powell, would you like to see my crypto gains? I bought dog shit token today and I scored 1000% gains. Why would I even bother going back to corporate slavery? This is the yayo economy. This is what you created. Why are you complaining right now? Of course, we're all dancing for now at the tune of DJ Powell. But what Powell is not going to tell you is this inflation, this everybody's a winner economy is not going to last forever. And what happens is they're going to be forced to raise interest rates abruptly. The betting odds for a surprise interest rate hike are surging higher and higher and higher. And when that happens, goodbye. And everybody in this economy will get caught with their pants down. Mr. Powell says we're going to reach full employment by next year. And therefore, we have to continue to print yayo month after month because we have not reached our maximum employment policy, which they will never achieve, by the way. But Powell says, give us till next year. We'll get it done. You know what else is going to get done? Inflation surging out of whack, and the labor shortage will get worse and worse and worse. More yayo at this point will mean more labor shortage. Does Jerome Powell, the head of the Federal Reserve, the chairman, even understands this? Of course not. We have restaurants, Mr. Powell, right now, shortening their business hours because they cannot find staff. And they're not going to find staff in this economy absent of massive wage hikes. So wage inflation will continue to go higher and higher and higher. But rest assured, if you thought Jerome Powell is toast, we have another senile leader who continues to defend Powell, and this is his former boss, Janet Yellen. Janet Yellen says, I defend Jerome Powell's record in regulating the financial system, even though in the past she has expressed some misgivings about the rule-making under the Fed chairman's watch. And I don't know if you caught the interview over the weekend with Janet Yellen. She was on complete display, delusional, out of touch, out of mind, not even looking at the camera during the interview.
As this rising inflation is hitting Americans' wallets hard, impacting everything from gas prices to groceries, when do you expect the inflation to get back to the 2% range, which is considered normal? 2022, 2023, when?
Well, I expect that to happen next year. Monthly rates of inflation have already fallen substantially from the very high rates that we saw in the spring and early summer. On a 12-month basis, the inflation rate will remain high into next year because of what's already happened. But I expect improvement by the middle to end of next year, second half of next year.
Second half of 2022.
Janet Yellen also says the U.S. is not losing control over inflation. Rest assured, folks, everything is under control. We're not losing control here at all. Don't look right here. Don't look at the ports in L.A. and Long Beach. Don't look at the empty shelves. Don't look at the prices surging out of whack. Everything is under control. This is the 1930s. We can do propaganda again. After all, we control all the media, and we want to control all the social media. We don't want any so-called independent media, independent thinking. Critical thinking, not allowed. Just believe whatever we tell you. Trust us. And of course, Janet Yellen has her priorities straight. Here's the piece of news we got out of the Treasury Department today. It says the U.S. Treasury names J.P. Morgan executive as racial equity czar. Wow. Let's name a former J.P. Morgan criminal ahead of the racial equity. This is the same J.P. Morgan, by the way, who led the predatory lending to black families and ended up robbing their homes away from them. And here we have yet another senile leader in Nancy Pelosi, who is in her 80s, by the way, but she is still making decisions on your behalf. Gen Zers, millennials, Gen Xers, retirees. What does she care? She has one foot in the grave, and she's already a millionaire. Yet she's making deals on your behalf, even your dental plans.
One of the questions right now is paid family leave. You said that you hope that that's going to be in there, 4 weeks of paid family leave. And the expansion of Medicare to include dental, vision, and hearing coverage. Is that going to be in the bill?
Well, that's part of the negotiation. Dental is very expensive. So hearing and visual and dental, but dental will take a little longer to implement. But that's part of the negotiation right now.
So you don't know what's going to be in the final bill.
Well,
it sounds like you're saying
dental might not make it because
Well,
it's so expensive.
it'll be on a path. It'll be on a path. But what they told us, and I don't quite understand why, but we've been told by people who know about these things that it'll take 5-6 years in order to implement the dental.
And you know what? I don't care about dental at all. I care about money. But I know nobody cares about dental right now. We'll do it in 5, 6, 10 years. It doesn't matter. We're just going to pass some scam here to pass some billions of dollars out of taxpayer money to our donors and sponsors. But the best part of the interview was when Jake Tapper asked her about her Tesla calls. Would you like to share your trades, ma'am, with us, the American public? And here was Nancy Pelosi's response.
Oh, you think I'm going to make an announcement right here and now?
Yeah.
Why would I tell you that now?
Well, it's not just me. It's the American people. It's the world. This is an international show.
Well,
and I say, Nancy, had you shared your Tesla calls trade, we would have followed you and we would have made money. And then we wouldn't need dental plans. You see how it works? You want to help the American people share your trades. We could have made a lot of money today. But of course, unfortunately, Nancy did not share her trades with us. You see, Nancy, if you share your trades with us, we all YOLO the same stock at the same time, and we hodl forever, then the stock will never go down. And then we can all borrow money from banks against our equity shares. Right? We channel our inner billionaires, our inner corporate insiders, and boom. The economic problem is solved. The U.S. debt crisis is solved. Everybody wins in the economy. But Nancy says, no, we need poor people. We need losers in this economy. But rumor has it Nancy Pelosi shares her trades exclusively in her OnlyFans channel. I have not verified that. I'm scared to verify it, but you tell me. And let's move on to the last story of the day. Earnings. And we start with Kimberly-Clark, a consumer staple giant that reported in the morning. And guess what? The earnings came out short. Kimberly-Clark lowers full-year outlook amid higher input costs, inflation. So here we go. Inflation is hurting another consumer staple giant. We'll look at the earnings report. For example, the net sales for personal care were up 14% year over year. For consumer tissue, they were down 5% year over year. For KC Professional, they were up 13% year over year. And the net sales all in all were up 7% year over year. Here's the problem, the margins. The operating profit, for example, for personal care was up 2% year over year, but down a stunning 30% for consumer tissue. I mean, you guys are jerking off all over the place. How come you're not using tissues? And then we have KC Professional up 10% year over year. All in all, the operating profits were down 1% year over year. Now we'll look at the income statement. The net sales went higher by 7% year over year. On the other hand, costs went up higher by 14% year over year. Here's the problem. When you have your expenses rising at double the rate of growth in your sales, we got a problem here. And what is the remedy, by the way? This is a consumer staple giant. They have a pricing power, and they're going to exercise their pricing power by jacking up prices higher to us, the end consumer. And this is exactly what Kimberly-Clark is doing right now. Kimberly-Clark says inflation supply problems aren't going away. You hear that, Mr. Powell? The stock is down. Our earnings were negatively impacted by significant inflation and supply chain disruption that increased our costs beyond what we anticipated, said Chief Executive Officer Mike Hsu in a statement. Here's the important part. We are taking further action, including additional pricing and enhanced cost management to mitigate these headwinds, as it is becoming clear that they are not likely to be resolved quickly. You hear that, Mr. Powell and Mr. Biden, Janet Yellen? You guys hear all of this? Corporate leaders are sounding the alarm. They're going to jack prices higher, and this is not going away anytime soon. Kimberly-Clark planning further price increases to mitigate inflationary pressures. And the last price hikes were in July, and now we're about to have more price hikes to come. Not just from this company, by the way. Procter & Gamble, Unilever, Nestle, all of them are pushing prices higher and higher and higher. Next, we have Facebook. What's going on here? You know, Facebook CEO Mark Zuckerberg has been a bad boy. He's been defying the CIA. You know, if the CIA come to me and ask me for something, I'll say, you know what, whatever you want, whatever you say, CIA. I love the country. I'll do whatever you want. Not Zuckerberg, though. Zuckerberg continues to be defiant. Even though the CIA and their allies, they want Zuckerberg and Facebook, their algorithms, of course, to only push so-called verified sources. We're talking about CNN, Washington Post, New York Times, but no independent journalism at all. because it could lead to misinformation. And of course, Zuckerberg on the call, I don't know if you listened to the call, but he took a jab at a so-called conspiracy that they're collaborating together to hit Facebook. This was an indirect jab at the CIA and their allies, chiefly eBay billionaire founder Omidyar, because we now know who's been funding the so-called Facebook whistleblower. It is actually Omidyar, and when we dig deep in the Washington Post, for example, the list of the Clinton Foundation donors, you will find, here it is, ta-da, Omidyar. So now they're pissed off against Facebook. You cost us the elections, and therefore we have to conduct some revenge and punish Facebook. Zuckerberg remains defiant, and he says, no way, I'm going to do whatever I want to do. You know why? You might be the elite intelligence agency in the world, but I got intelligence on your intelligence. You know, all of you who posted things in the past that you're not proud of. You think you deleted those. You think the sexting and the disgusting messages that you sent to people in the past, they're gone, right? But Zuckerberg says, I got the records, baby. I got everything. Now, what about the numbers? I told you last night I'm looking for revenues year over year, the ad revenue exceeding 56% year over year to continue the growth story for Facebook. Any number below 56, it's not going to be good. It is an indicator that the growth in Facebook is slowing down. Perhaps the ad revenue across the board is slowing down due to the supply chain crisis or due to Apple, the iMob store, the racketeering operation costing ad dollars from these apps. Now, here are the numbers that we got today. The ad revenue was up 33% year over year. This is good, but it shows that the ad revenue is slowing down. The growth, the momentum in the company is slowing down. On the other hand, the so-called other category in revenues were up 195% year over year. And therefore, Zuckerberg today did a cute trick trying to distract from the ad revenue slowdown by saying that we are a VR company, we are the metaverse company, forget about Facebook, forget about ad dollars, and please concentrate on our VR initiatives. The problem is the numbers don't lie. The revenue growth year over year was 35%. On the other hand, the growth of expenses year over year, 38%. What happens when you're a company and your expenses are rising faster than your revenues? The answer is soon enough, your net income will be damaged. For now, the net income growth is 17% year over year. But this is not going to last. We will look at the operating margins. They're actually down from 37% last year to 36% this year. And their tax rate, by the way, also surged higher from 4% to 13%. So we have a massive problem here, not just with Facebook, but probably with Twitter, with YouTube, with many other companies. Not just due to the iMob's racketeering operation, by the way. This will continue to be a problem in the next few quarters, and perhaps until we have a resolution. But the bigger problem here, the fact that we thought Facebook and these big cap technology names are immune to the supply chain disruptions and immune to the story of inflation. Well, now we know we're wrong, not we, but the morons over at Wall Street. They got it wrong, and the reason is the supply chain disruptions are costing ad dollars away from these companies. Businesses, the likes of Toyota, for example, one of the largest advertisers in this country, they cannot produce cars. There is a chip shortage, there is a steel shortage, there is a magnesium shortage, there is an aluminum shortage, there is a copper shortage, and they're not going to be able to produce cars anyways. So why spend millions, if not billions of dollars on ads when you don't even have a product? And this has impacted Snapchat and Facebook negatively. And my assumption is that this slowdown in ad revenues will also hit Twitter and Alphabet. Anyhow, folks, we're moving on to the markets coverage today, starting with the market's performance. And here we go. The Dow Industrial Average closing in the green by 64.13 points, or a gain of 0.18%. The Nasdaq closing in the green by 136.51 points, or a gain of 0.90%. The S&P 500 also closing in the green by 21.58 points, or a gain of 0.47%. And here are the sector's performances today, leading the pack at number 1 and capturing the gold medal, consumer cyclicals, aka Tesla. At a number 2 for the silver, energy. And at number 3 for the bronze, materials. Meanwhile, the laggards of the day led by utilities, defensives, and communication services. All in all, this was a classic inflation trade kind of day with energy and materials leading the pack. Of course, the rise of Tesla, the pop of over 10% today in Tesla, distorted the performance of the market. You see the indices, the NASDAQ, the S&P 500 closing in the green, but only 2 sectors of the market, in reality, energy and materials, that managed to outperform. What about the advance to decline ratios? The NYSE 64% advancing versus 34% declining. The NASDAQ 61% advancing versus 36% declining. Moving on to futures, what's going on here? Energy prices continue to pop higher and higher and higher. Every pause, every dip is an opportunity to buy in the commodities market, specifically in energy, grains, metals. They're all surging out of whack. We have natural gas prices popping by more than 12% today. You thought the performance of Tesla is impressive. The performance of natural gas will blow your mind away. And the sustainability of the rally for Tesla versus natural gas will sustain the rally until the end of this inflation episode. When I say the end of this inflation episode, I mean the crash. Tesla will not sustain the rally. So commodities remain the way to go to bet on this inflation rising higher and higher and higher. We also have gains for gasoline prices, a little over 1%. Meanwhile, crude oil prices were down slightly for the day. But once again, every dip will be bought here. They're not going to stop. Market participants know what's going on. Inflation is surging out of whack. You're going to repeat the 2007 playbook. We're going to bet natural gas and oil prices to the moon. What about grains? We have a massive rally for oats, canola, soybean oil, soybean, wheat, all surging higher. Of course, the bulk of the gains came from oats and canola futures. On the other hand, corn futures were in the flat line, while rough rice and soybean meal futures closed slightly in the red. What about meats? Here comes the new big tech. Lean hogs surging higher again. Perhaps the sell-off is over here. Lean hogs futures moving higher by a little over 1%. So did feeder cattle futures. Live cattle futures, similar story here. We're all surging higher. What about metals? The dollar pretty much stable for the day, moving slightly higher, but this was good enough for metals to stage a rally for about 1% apiece for palladium and platinum, while we have modest gains for silver, copper, and gold. Lastly, what about softs? We have gains led by sugar, coffee, cocoa, and cotton futures, all closing in the green, while we have modest losses for lumber and OJ. The story is not going to change here, folks. So long as the Fed continues to be in denial, commodities prices will continue to surge higher and higher and higher. Moving on to the big casino, the options market. What's going on here? You guessed it, at number 1, the hottest table by far in the casino. Tesla, the souffle, with over 2.5 million contracts traded today. About 69% of those were calls. Somebody please send this to Elon Musk and tell him that 69% of the options volume today was for calls. He will get excited, of course, like a little baby. And here it is at number 2, Facebook. What difference would it make, right? Facebook at number 2 with about 650,000 contracts, about 59% of those were calls. And here it is at number 3, Apple, with about 530,000 contracts, about 65% of those were calls. And watch the ticker BKKT. This is surging higher. Call options are on fire. The stock was up over 300% today due to a deal that they have with MasterCard to provide cryptos. And moving on to the unusual activities that took place in the options market today, starting with Tesla, the ticker TSLA. We have a strangle trade here. Somebody's not sure whether Tesla is going to continue to pop higher or it's going to reverse to the downside. But this somebody knows that there is a massive move to come in the next 4 days before the expiration date, October 29th. And therefore, they bought the 1,150 calls, and they also bought the 950 puts. And they paid all in all about $11 a piece for this trade, spending about $33 million for this trade. Now, the trader is betting that we're going to have a move so large, one way or the other. The rise in implied volatility alone will make this trade worth it, because if the stock continues to surge higher, this is the consensus and the assumption that the whatever squeeze is going on right now will continue to go on for a few days. This trader will score big due to the rise of IV. If the stock reverses for whatever reason and starts to trade down by more than 7%, then the IV alone will also make this trade worth it. They're going to double their money either way. This is, of course, a risky trade. You're spending a lot of money. These are big whales, big sharks. They know exactly what they're doing in the options market. So if you follow these trades, please do carefully. And then we have the trade for the ticker CVS for, you guessed it, CVS. They're about to report earnings and somebody's betting for an upside surprise here by buying the 95 calls for the expiration date November 5th for CVS with expectations that the name could pop higher by more than 8% or so by then. They paid about 29 cents apiece to enter this trade. All in all, spending about $850,000. And then we have the trade for the ticker MARK. Pay attention now, because this is related to DWAC, DWAC, the Trump SPAC for the social media truth, whatever that is. And here is the connection, of course. This stock was up over 100% today, and it continues to rise higher after hours. Mark stock, 13 things to know about the Remark Holdings, this is the name of the company, as DWAC frenzy takes it higher. And it is related to Trump Hotels, by the way. Trump Hotels news is boosting MARK stock today. Recent news concerning Trump Hotels getting Sharecare Health Security verified has investors looking for Mark stock. However, there may be some confusion there as Sharecare Nasdaq, this is the ticker, SHCR, is behind the news. So why are investors turning to Mark stock instead? It is due to Remark Holdings being a partial owner of Sharecare. This has investors bypassing SHCR stock in favor of picking up shares of the company above it instead, the Remark Holdings. It is a cheaper stock, and therefore it will be attractive, more attractive certainly, than SHCR because it trades at around $3. So the squeeze is just starting for this name. It doesn't matter really if the stock is good or not, or if there is any validity to this news or not. They're going to pump it higher regardless. And somebody knows that, and they're betting for more upside to come from Mark. They're buying the $4 calls for the expiration date November 19th, with expectations that the name will pop higher. An additional 21% or more by the expiration date, and they paid about $1 a piece to enter this trade. All in all, spending about $2.3 million. And what about the trade for the ticker SNAP Snapchat? The name is beaten down. Somebody's betting for a rebound here by buying the $60 calls for the expiration date, October 29th, meaning this Friday, with expectations that the name could pop higher, or shall we say rebound higher, by more than 10% by Friday. And they were willing to pay about 52 cents apiece to enter this trade, all in all spending about $575,000. What about the trade for the ticker NEO? Believe it or not, if you bought NEO calls today, you scored more than you would have had buying Tesla calls ahead of time. Why? Because the implied volatility in Tesla was already surging higher. The implied volatility in NEO was suppressed to a certain level, and now it is surging higher. And therefore, the premiums in NEO appreciated at a larger scale than Tesla's call options. Even though Tesla went higher by over 12%, NEO went higher by a little over 7% today. But here, they're betting for more upside to come for NEO by buying the 44 calls for the expiration date this upcoming Friday. Everything is for the short term here. We don't have any conviction whatsoever in these moves. They're betting for moves in a short amount of time. In this case, for this upcoming Friday, with expectations that NEO could pop higher by more than 7% or so. They paid about 25 cents apiece to enter this trade. All in all, spending about $475,000. And what about the trade for the ticker FCX, Freeport McMoran? I happen to own the name, and they're betting for more upside to come, a big one. They bought the 46 calls for the expiration date January 21st of 2022, next year, with expectations that the name could pop higher by more than 17% by then. They paid about $1.25 apiece to enter this trade. All in all, spending about $2 million. The expectations here, we have a copper shortage, and China continues to hoard for whatever reason before the crash. They're buying commodities across the board. Who is the biggest provider for copper? The answer is FCX Freeport McMoran. Freeport says, we don't have the supply, folks. The demand is exceeding the supply, and therefore copper prices will continue to go higher and higher and higher, and this will impact Freeport positively. Lastly, we have the trade for the ticker FDX for FedEx. They're buying calls here ahead of UPS's earnings, by the way. way, this is an intelligent trade. They're buying the 255 calls for the expiration date, November 5th, with expectations that the name could pop higher by more than 8% or so by then. They paid about 69 cents apiece to enter this trade. All in all, spending about $1 million. Moving on to charts, starting with the 30-minute chart of the SPY. What's going on here? We know the chart is extended, overextended, out of whack, melting up higher based on algos, yada yada yada. But absent of a reversal signal, the assumption is what's been going on will continue to go on and on and on. The reversal will come from the earnings of big cap technology stocks. If earnings come out short, and they're already coming short by the way, we have Facebook after hours reporting earnings, they're not good. If we have Facebook down, and then we have Microsoft and Alphabet also underperforming in earnings tomorrow, then the sinkhole will open right away and we'll see a flush down as the selling resumes. There is also another important element here in the market that everybody has to factor in, which is the rise of Tesla. Tesla is a giant component of the SPY and the NASDAQ. Yes, it is just one company, but the weighting is getting bigger by the day. And if Tesla continues to surge higher, if there is a squeeze, assuming it is a squeeze, this will keep a floor for the SPY and the NASDAQ until we get Apple's earnings. That's the other big one. Tesla can single-handedly keep the selling from hitting the SPY and the NASDAQ to a certain degree. But if the earnings from big cap technology names, Apple, Microsoft, Google, Facebook, come out disappointing and the stock prices react negatively, then Tesla alone will not save the market. Back to the chart, we don't have any resistance here. The sky's the limit, assuming that this move continues to go on. The support remains 454, but the more likely support will be at around 447. We're going to start to close some of these gaps that the chart left below. What will be the catalyst for the reversal, though? We already have a negative divergence on the RSI. This is a leading indicator, of course, to the loss in momentum. But we need a spark. We need a catalyst here for the reversal to happen. And it will happen if earnings disappoint. Moving on to the daily chart for the continuous contract for the SPY. How many green candles do we have right now? 1, 2, 3, 4, 5, 6, 7, 8, 9. I have not seen a consistent rally like this without a single red candle since perhaps the 2013 rally in the aftermath of the so-called taper tantrum. The momentum indicators remain strong. Both the RSI and MACD indicators remain in positive territory. We don't have any curling down here. The candlestick pattern remains positive and the chart is trading above the all-time highs of around 4,549.5. The warning sign that this is stopping for now is the rise in volume. But again, we're waiting for the catalyst. This is not going to reverse on its own. The algos continue to buy. And as they continue to buy, we're going to have more shorts covering. And this will intensify the rally higher and higher and higher. Absent of the majority of the human beings trading the market, reacting. They're not going to react either. Why would we react when we have the algos pushing the market higher and higher and higher? They're doing the hard work on our behalf. But if earnings disappoint, then the human being will react and say, you know what, let's book some profits here because the numbers don't add up to the valuations and the moves that we've been seeing recently in the market. Moving on to the Qs, the NASDAQ 30 minutes chart, what's going on here? It appeared that we are heading into a topping formation on Friday. We had a bear flag followed by another bear flag, an ominous signal that the Qs are about to break, but here comes the save from what? The souffle Tesla, pushing the NASDAQ higher and putting a floor for now, at least for now. The sky remains the limit if the chart continues to move higher and higher and higher, if the algos continue to buy, and we don't have any resistance from the human being trader and investor, we don't have any catalyst from earnings, the resistance remains at 372. And here is the daily chart for the continuous contract for the NASDAQ. We had a move higher, consolidation, building the bull flag, and the bull flag is playing out now, at least for now. It will struggle at the neckline and the all-time highs. They're not going to be so easy to pass. In the S&P 500's case, you have many sectors of the market. Some of them are working. There is no problem at all in these sectors of the market. We're talking about energy, materials, industrials, and even financials, assuming that rates continue to rise higher. Therefore, the SPY has a lot of support in this rotational market. Even if we have weakness in tech, well, guess what? The rise of energy, metals, industrials, and financials could compensate for that. Yet the NASDAQ is solely dependent on the 4 mega cap names: Apple, Microsoft, Google, and Facebook. And perhaps we have a 5th mega cap name in Tesla. It should be a mega cap name right now. It's $1 trillion company. Tesla's moving higher. How long can it continue to move higher? It depends if we have a squeeze or not. Facebook, I'm not impressed. It could go down and reverse the after-hour gains that we're seeing right now. Google, Microsoft, they're going to report after the bell tomorrow, and then we have Apple, the big kahuna, by the end of the week. If they don't deliver, we have more pessimism from investors that these earnings are slowing down due to the supply chain woes or whatever, then this pop will stall. And perhaps we will see the resumption of the selling right away in the NASDAQ. For now, the momentum indicators remain strong, the candlestick pattern remains positive, and it is eyeing all-time highs. The volume is slightly moving higher. This could be the only warning signal in this chart. So pay attention to the volume, and pay attention to where the surge in volume is happening. Is it happening on the downside or the upside? Are we seeing a surge in volume in buying or selling? Moving on to the IWM 30 minutes chart, what's going on here? The chart gathered some energy, popping higher above the resistance, now support of 229. It is now in a bull flag formation, indicating that perhaps we have higher highs. And we know that we are in a rotational market, meaning if the IWM pops higher, the NASDAQ weakens. The IWM represents the reopening names, the inflationary names, the small cap names. They tend to outperform when the market is not distracted by a move higher in the big cap technology names. Until this rotational mindset is changed, we have to assume that when the IWM pops higher, we're going to see a slowdown in the NASDAQ. We're not going to talk about resistance right now. The support remains 229. Let's see if the chart keeps this level as support before we start talking about resistance. Now we're moving on to the Dixie, the dollar index. What's going on here? It continues to hug the support line of 93.7 over and over and over again. What does that mean? It is a sign of resiliency, saying that the dollar is not ready to break down. It continues to hug the support. It wants to climb higher. And all in all, when you look at the macro picture, yes, the support is broken for now, but all in all, the candlestick pattern is a bull flag formation. The momentum indicators took a break. Now they're curling back upward, breaking the negative divergence, and perhaps we're about to see a pop in the US dollar. What does that mean for certain commodities? Well, it certainly doesn't mean anything for oil and energy prices because they were surging higher as the US dollar was also surging higher. So a pop in the dollar is not going to stop the rise in energy prices, but it could dent the recent momentum that we're seeing in gold and metals. And here is the chart of gold popping higher. But again, this is not sustainable, not impressive at all until and unless one of two things happen. Number one, gold breaks down to the support at around 1,685, let's say 1,680. Then we're going to have a quadruple bottom, and this will be a strong signal to buy. The other thing is, we're going to have to wait for gold to break above the three amigos, the resistance, and then I'll believe that there is a rally in gold. Absent of that, gold is just yo-yoing back and forth in reaction of its three enemies. Enemy number one, the dollar. Enemy number two, yields, the 10-year yield. And enemy number three is Bitcoin. One of these enemies was trading down, and this is the 10-year Treasury yield. Let's take a look at the chart. We have a defined channel, a positive channel, with higher highs and higher lows. The chart is trading at the upper range of the channel and facing the resistance. It could pull down all the way to the lower edge of the channel at around the support of 1.55%, and then it rebounds higher. But the pullback is a relief for gold investors. It is also a relief for big cap technology investors, betting that the rise in the 10-year yield will not be sustainable. The problem is tapering is about to happen, and we have more bets in the betting odds, by the way, that the Fed will have to raise interest rates abruptly. The odds for a June hike next year just went a lot higher. So the assumption here, rationally, yields will continue to move higher and higher and higher. They're going to take breaks, but they will continue to move higher and higher and higher in the grand scheme of things. And here is the weekly chart for the TLT. We still have negative divergences on both the RSI and MACD indicator. The likelihood is if yields on the 10-year rebound to 1.7 once again, then we're going to see the TLT moving back to 134.5. On the other hand, if we have a pullback, a reversal in yields, breaking 1.5%, the support of 1.5%, and the assumption is the TLT will move higher, breaking the resistance of 149. But for now, the outlook remains the same. Yields moving higher to 1.7, TLT moving down to 134.5. What about the 4 hours chart of the VIX? Did it stop working as a leading indicator for the market? Who knows? Because we have a move higher in the MACD indicator, yet we're not seeing a pop in the VIX or a pullback in the SPY. Now, mind you, this has been a reliable indicator for us all the way, going back all the way to June. Every time we have a pop higher in the MACD indicator, that results in a pop in the VIX of a minimum of double digits, which comes hand in hand with a pullback in the SPY. We were able to trade the market accordingly to this extremely reliable indicator, the VIX 4-hours chart. The levels in the MACD remains suppressed. They are at a bottom. The chart is working its way higher from suppressed levels on the MACD and the RSI, and therefore creating green columns on the histogram of the MACD is not going to be enough here as an indicator that the VIX is about to pop. But bottoming indicators are good enough to lead us that the VIX will stage a pop higher very soon. And the risk versus reward in the SPY is to start taking profits from this pop higher, the relief rally. The relief rally is going to come to an end the moment the VIX starts to pop higher. It is building energy for now in the RSI and MACD. When will the pop happen? It will happen when the MACD indicator crosses to positive territory or closer to that point at the neutral line around zero. Moving on to the daily chart of Apple, what's going on here? Still facing the resistance at around 150. It is building that energy, the bull flag, waiting and waiting and waiting for earnings. If earnings come out pristine, then the stock pops higher, surpassing 150. Your assumption, of course, what if the earnings from Microsoft and Alphabet come out short? This will impact Apple negatively, right? But remember, the narrative for now is Apple is siphoning all of that revenue, the ad revenue, from Alphabet, Twitter, Facebook, and Snapchat. What if they're wrong, though? What if this is not an Apple story? What if this is just a supply chain story, an inflation story, that advertisers are not paying for ads anymore? We will know that for sure when we get the earnings from Microsoft, Google, Twitter, but mostly from Apple. If the results from Apple for the services revenue are not growing significantly higher, then this is not an Apple story. This is an inflation story. And most importantly, from the earnings, we're going to look for the growth in the Greater China segment. The assumption here is the stock will consolidate, not doing anything at all, between the support of 145, the resistance of 150, until earnings. And this will be an opportunity. As the stock cools off, these premiums will go down slightly, giving you the opportunity to bet up or down at a better price. And here it is, the daily chart for, you guessed it, the Souffle Tesla. What's going on here? A rocket ship. We should change the name to SpaceX, because this is what it looks like, right? But here's the problem. Look at where the RSI indicator is trading. It is trading at a sell zone. Every single time the chart of Tesla traded at these levels, we have seen a massive pullback. Now, you might look at some of these pullbacks and say, you know what? It's not a big deal. These are small pullbacks. They don't look big at all, looking at the chart right now. But keep in mind, even the smallest pullback was over 11%, and therefore, the risk versus reward here, is it to buy and follow the herd, the pop, the squeeze, whatever it is, or is it the opportunity to take profits and start a short position? I'll go with the latter. Everybody's scared of shorting Tesla right now after this pop higher. I see it as an opportunity to buy puts at a cheaper price. But of course, you have to buy your puts strategically, gradually. If you go all in buying puts right away, who's to say that this pop is not going to continue for a few more days and your put options will decay in value? And therefore, you open the positions in 3 increments. Today was one, perhaps tomorrow another one, and then the third one, the biggest increment, happens after confirmation. What am I talking about, by the way? Spike top pattern. What is a spike top pattern? Here it is. A certain event, some news on the economic calendar or force majeure, mostly overvalued economically, makes the quotations skyrocket. After a participated impulse, the quotations stop at the high, where a reversal candlestick may form, a harami, pin bar, shooting star, and the like. Then on the next candlestick, the quotations return to the initial values where they started growing from, and then the existing trend normally reverses. The price starts moving in the opposite direction. Are we having a spike top pattern? We'll see. We don't have the confirmation yet. And therefore, if you want to short this one, you got to proceed with a lot of caution. Here are some examples for the spike top. A short of Zillow, for example, a name that I'm short. The spike top was the signal to short the stock. And exactly since then, the stock has been trading down. Another example is AMC, similar story. We have a spike top, although a little more resilient than Zillow. AMC is still holding, be it at a lower price than the spike top. We have another example in your favorite DWAC, DWAC. We had a spike top, and now the chart is trading to the downside. These spike tops usually, not always, but usually stick around for a long time. So if we have a spike top in Tesla, it will stick for a little while. The problem is we don't have any confirmation that indeed it is a spike top. Moving on to BTC tulips. What's going on here? We had a lot of good news today for tulips, and therefore, after a much needed break, by the way, taking a little air out of the bubble, now BTC is moving higher again. Does it have the energy needed to break above the resistance at around 64,899? We'll see. But the momentum indicators already topped and they're reversing to the downside on the daily. This is usually not a good sign. Perhaps we will see the head and shoulder pattern and BTC will trade to the downside. But there is still room for the tulip market to continue to move higher. But it has to do it fast. It has to do it in 2 to 3 days. It has to beat the reversal top at around 65,000. It has to do it in 2 to 3 days maximum. Lastly, what about AMC? What's going on here? We had the head and shoulder formation, and that broke to the downside. Now AMC is hugging the support of 36.5 over and over and over again. The problem with AMC is not technical in nature. It is psychological in nature. The apes are being distracted here. AMC hasn't moved higher for weeks. It has been dormant for weeks and weeks and weeks. On the other hand, we have cryptos moving higher. We have DWAC, the quack, moving higher. We have other names that I shared with you in the program today also moving higher. We have Tesla moving higher. Lots of distractions. And if more apes pull the plug and say, you know what, I'm sick and tired of waiting for this holy short squeeze that is not happening. I'm going to take my profits, my gains, my losses, whatever it is. I'm going to move on to another exciting trade. Then the problem starts in AMC and we see lower lows. 36.5, you got to keep that support. Otherwise, the next support will be 32. And after 32, it's goodbye. Moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have the Case-Shiller Home Index. It's going to be another stunning number, by the way. And then we have the Consumer Confidence Index. And lastly, we're going to have the numbers from new home sales. Will be another important number to wait for. And before we say goodbye, what about the earnings calendar? What do we have over there? We have in the morning UPS, 3M, and then after the bell, we have Visa, Microsoft, and Alphabet. A highly anticipated day. Anyhow, folks, this is all I got for you for now. Thank you for watching. Thank you for listening. And I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.